Happy Friday, traders. Pretty volatile market. We just had a pretty big pop. I'll show you that. I'll just start with that. Again, derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. We've had quite some movement. This to me, with the increase in volume, as you can see, the volume tapering up and the delta pushing higher with price. For me, in an instant here, it looked like it's news. That coupled with the fact that the offer thinned out very quickly and the velocity of price change here indicates that it's likely to be a news-based event that we don't know about just yet. So that's occurring right when we start the trader bite. A small drop earlier, probably technical, supported by Fed's Rosengren, who's a dissenter, saying that there's no clear and compelling case for additional accommodation at this time. That non-farm payrolls really didn't do much, and then shortly thereafter, we got the Rosengren comments, and now I'm suspecting that at some point here, here's this. This is a very typical news-based move type of behavior, where the SOC is somewhere in here where the volume picks up. So what? Hang on. I'm not sure if that's it, but they're saying CNBC had summarized or analyzed the comments that were made about China and is offering a perspective that the market's responding to. But this is behaving a lot like a scene of the crime or a news-based trade, where somewhere down here in the 2945 is where it likely began, and it's working its way back down. So not seeing too much. I've got three news feeds, and I'm not seeing anything across the board. There's comments in the chat that open to delaying or halting the 10% tariff to to 9/1 if China would take action between now and then. Um, okay. Uh, all right. So that's where we are. It's a very news-driven market, but let's pick it up from the top. Let's pick it up from the top. Welcome again to another Trader Bite. This is episode 1569 today. It is Friday. Happy Friday. This morning, the overall market sentiment is risk off. We were in a gap. Just below. Again, risk off sentiment. It seems like the risk assets are all lower. The DAX being weakest, down 261 points currently. It was down worse than that on fairly heavy volume, down 2.13%. The Euro Stoxx down 2%. The Nasdaq down 32 points or 0.41%. The leader today is crude oil up 50, trading at 55.11, up $1.14 or 2%. Crude took a big dive yesterday and actually broke some pretty big areas to the downside. Gold, big pop, $1,446, up $14 or 1%. Clearly, the market is moving to safety. That's where we are. Volumes have been very high. The S&P yesterday, the S&P overall has been has just had an outstanding range, 69.75 points, and had really heavy volume. Yesterday, it managed to continue the impulse from the Fed day with an even bigger impulse yesterday on the daily. It managed not only to put in almost 70 points of range, but it actually took out the low by 27.75 points. Put in a lower close by 27.75 points. Really significant there. So that's where we are. Key level that's been established at the SOC, or the scene of the crime, for the Fed conference drop was from 3,009 10-ish, 3,975, and then the Trump comments on tariffs on China yesterday occurred at 3,009 and a half. So I would suggest you mark that area. That's where the interruption to the auction took place. So that's where we are. Let's move on to, I'm going to do this real quick. Let's move on to what's expected for today. We had non-farm payrolls came in line, 164,000. Balance of trade came in slightly worse. This whole trade thing isn't working out too well because our balance of trade keeps being worse than what we would what's being expected. We do get Michigan sentiment at 9 Central, 10 Eastern, and factory orders, and that wraps up our week. Now, the scheduled releases clearly aren't doing the trick here. It's these surprise or these unannounced or unscheduled announcements that take place that are moving us around. Yesterday, the market actually followed scenario one. We did not get the pullback at all. We ended up opening in a small open auction, and then we continued higher all the way up into almost all the way up into balance here. We brought the participants were able to bring the market back to where we were balanced before that news came out, and it just went vertically down and took out the low. So I was uh, uh, following along on the long side only. The rotations were pretty clean yesterday, despite the fact that it did not give a push down to get a very advantageous long on for a push to the target area of about 3001 to 3004, as outlined here. But the rotations were very clean. The two-tick Renko does not do this justice. It's just there's so many rotations and so much volatility that the two-tick Renko is too small time frame. So you can see here on this chart that um, a nice open auction. Why is it an open auction? It pushed down from the open, it pushed up, and it came right back to the open. The green line is the opening print for the pit session, and then it starts to take out the opening swing high, pull back to VWAP, take out the high, pull back, take out the high, pull back, take out the high. A deeper than the usual rotation here, and the expectation is that it's starting to top out. And it does kind of sit there for a bit, but then it ends up taking that out, expanding the rotations up, and then the trend up resumes through 3,000. This was a tricky area here. Otherwise, it was all about just finding an area to get long, finding an area to lean against to get long, and we end up pushing right back to equilibrium. So as we follow along here in this market, let me turn the zigzags off so we can get a clean chart. If you follow the rotations, 3007 brings us back to the overall balance. That's the MC point of control, the most accepted area or the most accepted price by volume in this entire area. And my expectation is it's likely to push through, come back, consolidate around this 3007. This was starting to now cut into the European close. But there was still some oomph behind it. So you could see it consolidating here at the MC point of control as we would expect, but it didn't last here very long and ended up pushing right back through to the FOMC announcement scene of the crime, and right back up into the almost to the prior day's point of control, amazingly, the prior day's point of control, and it started to balance out until the news came out, which came out right here at 2009, 3,950. The news came out, and then we see the market pulse down, and then we see volume come rushing in. right after. So you can see the delta just dropping very rapidly, and the market just absolutely just pounding through. Um, it's still held, it's still held the stock zones pretty well. Still held the stock zones pretty well yesterday. I shifted these slightly, but not by much. And it came right back to the prior day's close, consolidated, and then took out the low and started to shift down. We closed below the one volatility sigma band, and on very very high volume. So this drop yesterday, although unfortunately in a way, especially for those guys, those bears out there, it's happening on news, which really throws a wrench in things, because news is very often taken back, just like we saw with the Fed conference. This is happening on news as well. So I am very cautious. The Fed day left a double TPO high. If you look at a market profile chart, you'll see you'll see that there's a double TPO on the Fed, that this actually, the Fed day high of 1850 is actually a weak high. This is a really weak high on intraday with the double top, but also it's a weak high with the prior day. This zone here is relatively weak up here. So just maybe put a line up there and mark it, whatever. This 301850 is likely to get retested statistically, is likely to get retested. So that's where we stand. Again, we spent most of the overnight session just below yesterday's action. The market had a risk-off sentiment all over the globe, and has been balancing. The volume was very, very high in the overnight, very high at 604,000, I believe. Let's see if that's correct. Yeah, 604,000. The overnight range is quite wide. It's almost 30 points. It's 28 points. That's very unusual. And overall, the non-farm payrolls didn't have any effect, but this trade talk stuff does. Again, we're back in the zone of where we were late November, December, and much of the early part of the year, where it's really key to have a good news feed, and to keep it on. If you're a Convergent member and you have not used your news feed, it's a big resource, and you really should have it turned on and running in the background. You don't have to look at it, but at least you're getting some feedback as to what's going on. Here's the spike. So this is, as I said, this looks like a news-based spike. This is a very typical news-based behavior. So I started out the session by saying, hey, we don't know what this is yet, but this definitely looks like news. And it is. It's come really almost the entire way back to where it started, and we're sitting here at 29, 45, 46. Anyway, so we see liquidity kicking in right at the top, as it often does. I love that the top is also the high of 2018 at 2960, which was close to the low put in on the Fed day 2 days ago. There's a little bit of respect for the day time frame levels here still. All right, so let's take a look at what we're expecting for today. I'll try to keep this as clean as possible. I'm not going to do the like Friday stuff. You all know that it is like Friday, and to take a moment and just hit the like button. We do this once every week. It helps give exposure to the channel. I'd appreciate if you do that, but I'm not going to show the graphic for that. So let's go down to 2 Vola Sigma. 2 Vola Sigma, there we go. All right, so we're opening right in the lower end of the range today. Here's the thing to contend with as a trader. I love the volatility, This is my kind of market here right now. Unfortunately, I've missed both these big moves in the last 2 days with afternoon meetings. Um, but the key thing here is that you have to be very non-rigid. I mean, you have to be really, really open-minded. This is the kind of trade that could really eat your lunch if you decide to just kind of wait, get into a position, wait and see before you set your stop or whatever. Okay. So just make sure, and everything I'm saying here is my opinion. And as I said before, derivatives trading is not suitable for all investors. But the way I see this is it's very, very likely to open and push back towards this big zipper from yesterday to push back in there, consolidate. But overall, this was an impulse day, unfortunately, on news. But I'm looking for a lower low to start us towards the overnight low, and then for a push to the 24 and 22 area before the market gets some support and ends up coming back to this 44, 45 area for the afternoon. Okay, so that's how things are shaping up coming into today. I expect us to make an attempt higher to balance. The overnight session is fairly balanced. Make an attempt higher, and for us to fall as a follow through to the impulse from yesterday as a continuation trade, which is kind of the nature of the market. The secondary is we open and we fall off immediately. If we fall off immediately on an open drive or a small test up and drive, I am expecting it to push down a little farther. The 29.15, 29.15 and 14 areas are relatively significant. I'm expecting a consolidation and a turn there and a return back up on the secondary. So I expect it to just move deeper as opposed to pushing up and then methodically selling off as late money starts to liquidate on higher prices. The tertiary is that down we push down into the 2938, 2936 area, impulse up. If we get a drive up, I would look for it to consolidate at VPOC, push the overnight high out, and then I'm looking for it to come right back up into yesterday's open, 81, 83 area, consolidate up here, and then potentially start to shift up. And scenario three is built a lot on the SOC of yesterday. Um, you know, some look, POTUS does not want this market to drop. POTUS does not want hundreds of billions of dollars of valuation of the market to take place. Okay, there's a huge incentive with the election next year to keep the market at high valuations, keep people's pockets full, and valuations higher. So I think the stance from the White House is likely to be softer, and we saw a little bit of that on this news pop this morning. Apparently, I have not seen it. Oh yeah, there it is. CNBC confirms that it would be willing to delay the new 10% tariff if it takes more positive actions. So we'll see what happens there. But it's scenario three is actually quite likely. I'm open to any one of these. I'm going to be watching the usual. Where do we open? How do we open? Who's in control? What are the rotations like to build the context for the day? And then I'm watching my stock zones for areas to engage the market. Do not engage just anywhere. Try to engage right in those areas. And then whatever side wins, I don't really care. I have no loyalty to the long side or the short side, and I'm going to push from that side. And I expect that if you're a day trader, you'd want to do the same. Okay, so I'll leave you with that. One last thing. I am gone. I'm going to take a short trip. I need a break. I'm going to take a short trip. I'll be in Denver, Colorado tomorrow morning and through Wednesday. I love to hike and I love mountains. I grew up in Switzerland and I miss them. So we're heading over to Denver instead of internationally as I do every year. And I'm going to be gone Monday, Tuesday, Wednesday. There will not be a trader bite those 3 days. So don't expect me to be here those days. For Convergent members, I will be updating the stock zones and the daily levels as per normal, and then I'll be gone for the rest of the day, Monday, Tuesday, Wednesday. Cool. All right. Good luck to you all. I'll be back on Thursday of next week, the 8th, with another Trader Bite that summarizes what had happened for the last 4 business days, and we'll catch up with you. I hope you're enjoying the summer. And by the way, it is a high probability play that while I'm gone, big things will happen. This has worked for the last 10 years. Every time I'm gone, big things happen. So get ready, make sure your account's well funded because when I'm gone, the market just rips around. And when I come back, it goes quiet. It's worked so well. Those who follow for a while know that this is the case, and it's actually a running joke. Good luck, everyone. Take care.